Right, well, the Sam Bankman-Fried story and FTX and FTT, which is their token, and ALAMEDA, which is kind of the hedge fund, ALAMEDA Research, that they created back in 2017. So Sam Bankman-Fried came out of a company called Jane Capital, and he comes from the very shadowy world, the very shady world of high frequency trading and kind of the shadow banking system and the market making that's done kind of in the gray regulatory zone. And there's a lot of these firms that exist on the periphery. There's a lot of debate whether they're actually engaged in lawful activities or not. But that's where he came from. So he came out of Jane Capital. He started ALAMEDA Research, which is another one of these market making, high frequency trading, arbitrage, chop shops that are very fringe in terms of whether they're legal or not legal. They exist kind of on the periphery. And he was engaged in a lot of skullduggery over there at ALAMEDA. Then they decided to start their own exchange, FTX. And they lobbied very hard in the Bahamas, where they felt that they would get very little regulatory oversight. They went ahead and they bought 10% of IEX, which is another one of these shady peripheral exchanges, to give themselves regulatory legitimacy. They then floated a token called FTT, which is part of the whole scam token world that we've been talking about for a number of years, whether it's Ethereum or Cardano or FTT or XRP. These are just scam tokens. And he used that and listed it on other scammy exchanges to create a price, and then using that as collateral to buy assets like real estate in the Bahamas. And now, as all Ponzi schemes eventually do, they run out of kind of runway, and they crash and burn. So it is similar to Bernie Madoff in that respect. It's also similar to the 2008 financial crisis, where Wall Street spun out of thin air all these derivative contracts, and they created this multi-trillion-dollar Ponzi scheme that blew up finally in 2008, and with the help of the Fed and central banks to bail out all the crooked bankers once again. So there's a lot of similarities to that. There's similarities to the S&L crisis of the late 1970s, early 1980s. I should note that the S&L crisis, which is a similar crisis of using federal money to backstop a fraud, William K. Black, who was the regulator at the time, he put 1,000 bankers in jail. And we haven't seen anybody with that kind of rigorous regulatory oversight in 40 years. There hasn't been any rigorous financial oversight in the United States and around the world. And if you're not going to enforce laws, you're inviting these problems. So the regulators have really some answers that they need to fill in. And so it's kind of a continuation, Daniela, of multi-decade scammy fraud banking nightmare.
Welcome to my channel. Time for Bitcoin. Max Keiser is a financial journalist and longtime investor. In this episode, Max talks about fraud in the cryptocurrency market, the role and usefulness and safety of stablecoins, as well as about banks that have already failed and are hiding it or are about to fail. He remains very positive about Bitcoin and believes it is the only financial solution that can save us from the collapse of the financial system.
The stablecoin market is outside really of Bitcoin and the, can I say shitcoin on the show? I don't want to offend anybody.
Yes, go ahead. No,
right,
no one's
Bitcoin,
offended.
Bitcoin, and then there's Mike Novogratz and a bunch of shitcoins, right? So, and then there's stablecoins, which is kind of, it's a hybrid, it's a product, it's like a money market fund. It's a way to get on and off various exchanges. It was born during an era when a lot of exchanges had different prices for Bitcoin, and you needed to go from one exchange to another, so this tether was invented. And it's backed by US dollars, and it's backed one for one by US dollars. And it's like a money market fund. And unlike, let's say, Circle, which is another one of the stable coin, but they actually pay people to use Circle, and as such, they are on the verge of bankruptcy. Whereas that Tether doesn't pay anyone to use Tether. There's a big difference there. So I'd say Circle is about to go bankrupt. Circle is the one you need to work, it's USDC. That's the one to look out for. Circle, they're in trouble. They're the next FTX. They're about to go bankrupt. That's a big pile of shit, is Circle. There's gonna be a price to pay for Sam Bankman-Fried. So it's clear that at the core of the issue is that he stole $8 billion from FTX investors, and he dumped it over at Alameda, and he lost it through reckless trading. And I think that that's a pretty clear case to be made. And we've recently seen his cohort, Caroline, co-founder, she's been spotted in New York City, deal with the New York prosecutor to turn on Sam Bankman-Fried. So I think that he'll have his day in court, and he'll end up going to prison for a very long time, as he rightfully should. The media has grown extremely lazy in the United States. They gave up trying to report factually on what's happening around the world and in the financial markets long ago. So I know no one really expects or looks to the New York Times or the Washington Post to provide journalistic integrity anymore. That ship sailed long ago. We know that they're just cheerleaders for the kleptocracy. They do a good job at that. They get paid well to cheerlead the kleptocrats in Washington and Wall Street, and I don't think anyone really expects anything else from them. The Lebanese central bank failed. The Ukrainian central bank looks like it's about to fail. Credit Suisse and Deutsche Bank, which are huge counterparties to the ECB, they look like they're about to fail. And the European zone is introducing draconian financial measures. And we also see it in the UK, where they're rationing energy in the UK. They're rationing food in the UK. So that's like a soft failure. They haven't formally declared bankruptcy at the Bank of England and the ECB, but they have structurally and effectively gone bankrupt. They're simply pretending like they're not bankrupt. The underlying member banks are all completely insolvent and going bankrupt. They have only one play in the playbook, and that's to print money. So inflation is a huge problem. And that whether the day that they formally announce bankruptcy, it'll be already too late, and everyone will have figured it out already. And so I stick to my guns on this one. Their central banks are deteriorating rapidly because of all this incredible debt. You know, people are talking about right now in the U.S. the debt when you add in both Social Security and Medicaid and the other liabilities is closer to 66 trillion, not the 30 trillion that they say that they have in debt. It's much greater. There's no way to address that debt. The interest on the debt will soon be a bigger line item on the books than the military, and the military is already taking $1.5 trillion away from taxpayers. So the Federal Reserve Bank is structurally insolvent. It's leveraged incredibly. The Fed is leveraged higher than Enron ever was. And so we can pretend that they're not structurally insolvent and bankrupt if we want to, but I think that's a loser's game. I think you have to understand that the central banks and the fiat money game is over, particularly since the war that started in February, where the producers of commodities, like the biggest producer of commodity in the world, is saying, you know what, we're going to price commodities now based on true supply and demand, not based on financialization or Wall Street. So that's going to put a lot of pressure on these over-leveraged banks. So it's better to be a little early than one day too late, Daniela. The Bitcoin maximalists have been telling you that all these other coins are scams for years. So if you lost money with the scammers, shame on you, because you got greedy. So nothing I can do about that.
Thank you for staying until the end. Please like and subscribe if you appreciate my work.